Yeah, really interesting point, that one, about what it means for rates from now on. Michelle, thank you. Good to talk to you. Michelle Fleury there, our correspondent in New York. Let's talk now, though, to Jimmy Lee, who is the chief executive of Wealth Consulting Group. The company's currently got $3 billion worth of assets under its control. Jimmy, good to see you too. Michelle raised that point there about interest rates. It was sort of the straw that broke the camel's back in this case. Do you expect that the Fed will be thinking differently about its rate hikes and the pace of those hikes?
Most definitely, and thank you for having me on today. I think in the end, what may happen is that what I've been praying for, which is the Fed to stop raising rates fairly soon, may happen. Now, a crisis like this wasn't something I was hoping for, but with increasing interest rates as fast as the Fed has last year and this year, something was about to break. And this was it. The 16th and 29th largest banks from Friday and over the weekend are now in receivership. So, I think the government's response was appropriate. I think that they were trying to protect the innocent who they've deemed to be the depositors. And so the companies that bank with those institutions are going to be able to pay their employees and so forth. And so I think so far the solution that they've come up with is good. I'm sure we're going to get some more clarification of how this program and the fund will actually work. But could there be contagion? And as you were just discussing, could more banks fail? I think that's yet to see, and I think that could happen.
Yeah, and that contagion risk is one that continues. As you said, these two banks, the 16th and the 29th largest bank. We're not talking about Lehman Brothers here, but it's that contagion. It's the fear that others are in a vulnerable position, albeit on a much smaller scale.
Absolutely. But I will say that for the economy, this is definitely a deflationary event. And so I do think that, at least for now, I think that the futures market is predicting that a 25 basis point or now more likely a no raise this month is likely. And I think for the stock market, then I think it's a net positive. I still think that the consumer is relatively strong in the United States, but they're slowing down. At the lower end of the consumer, we're seeing credit card delinquencies and auto loans in the subprime markets failing. But on the higher end, people are still doing okay and spending money. And so I think in the summertime, the consumer will really be tested. But I don't think that inflation has been really as bad as the numbers say. A lot of that being due to the housing market being destroyed and those numbers not being reflected in the current data.
Yeah, interesting, isn't it, how it's same but different, and there are so many parallels, and yet we're in such a different place right now as far as the overall picture is concerned. Talk to me quickly about regulation, because we see these calls to deregulate banking, to allow it a bit more freedom. They say they've learned the lessons from 2008. Have they?
Well, I definitely believe that the banking system in the United States is much more capitalized than it was prior to the financial crisis. Now, when it comes to the smaller banks, regional banks, and I think SVB was very isolated in terms of the kind of customers it served and the type of business that it was doing. And certainly it wasn't necessarily, really bad lending that has caused this. And it wasn't necessarily risky investments in the sense of government bonds, but the timing of those investments and trying to seek a little extra yield probably for net interest margin was what caused this. And could they have, raised the money that they needed in a different way before the market realized what was going on? And here we have in the middle of a classic bank run. And I'm hopeful that things will calm down, but it's going to take some time.
Jimmy, really good to talk to you. Thanks for being with us. Jimmy Lee there, the chief exec of Wealth